Welcome to DataSite's Sector Spotlight, a series of videos that take the temperature of M&A markets in the US and beyond. I'm Keith Fraser, Regional Manager of our TOLA region, and have been with DataSite since 2019. Globally, deal volume has softened, but deal values remain elevated as strategic buyers and sponsors look for scale and cash flowing assets. Globally, M&A volumes were down in the first half of the year while values rose, showing fewer but bigger strategic transactions. Private equity continues to lean into both traditional energy cash flows and energy transition plays. Big PE and infrastructure managers are raising massive pools. For example, Brookfield closed a $20 billion energy transition fund this year, signaling large capital available for clean tech, storage, and also traditional technologies like carbon capture. In the US, power and utility transactions are active. There were several billion-dollar deals in 2025, including Constellation Energy Group's $29 billion acquisition of Calpine, driven by investor demand for dispatchable generation and grid reliability as electrification accelerates. This creates attractive, predictable yields for PE. Turning to Texas, the state still anchors the country for big energy M&A. Recent headline deals and last year's mega transactions show how strategic buyers consolidate acreage, midstream, and downstream scale. Texas remains fertile ground for roll-ups and platform plays that PE sponsors like. Two important tailwinds tensions for deal makers. First, traditional oil and gas assets still generate cash and are attracting disciplined PE consolidation. Second, the rise of AI and hyperscale data centers is reshaping electricity demand. Data centers already consumed 415 terawatt hours globally in 2024 and have been growing fast, with AI accelerating demand and pushing interest in power-dense, resilient energy projects. That's creating new carve-outs, captive power, on-site generation, long-term PPAs, and specialist M&A opportunities. Energy's defensive characteristics and long-term upside continue to make it one of private equity's most dynamic plays. As regulatory clarity improves and capital flows accelerate, the sector is shifting from reactive asset rotation to proactive platform building, with mega deals reshaping the landscape and AI-driven demand accelerating infrastructure energy. M&A in 2025 is not just pivoting, it's scaling. From Texas shale to national grid modernization, private equity is building the platforms that will power the next generation. My quick forecast: expect continued bifurcation. Stable, yield-oriented PE deals in traditional energy, selective PE playbooks for energy infrastructure that services electrification and AI. For sponsors, the winners will be operators who combine conservative cash flow underwriting with technical capabilities to serve high-powered customers. Thank you for joining us today. DataSite constantly monitors M&A activity across all sectors globally, so make sure to visit our insights page on datasite.com for the latest trends and additional resources. Catch you next time.